Every dollar you spend passes through a bank. The only question is, whose bank? In this video, I'm going to give you a complete overview of the infinite banking concept, what it is, how it works, and how it can put you in control of the banking function for the rest of your life. We're going to cover three things. Number one, how the banking system works against you right now. Number two, how policy loans let your money work in two places at once. And number three, how to design and optimize your own IBC policy. This is the complete picture in one video. Let's go. Nelson Nash, the father of the infinite banking concept, wrote that banking is the most important business in the world. His words, without it, all business come to a screeching halt. Here is what most people never stop to think about. Every dollar you spend flows through the banking system. Whether you pay with cash, whether you swipe a card, whether you write a check, that money ends up back in the banking system. And here is how the bank profits from you while it sits there. Your savings account earns 1%. The bank takes your deposit and lends them out as real estate loans at 7%. That is a 600% return on investment using your money. Auto loans at 9%, 800% return on investment. Credit card debt at 20%, 1900% return on investment. Every single time you hand your money to a bank, you are financing someone else's banking business. But here is what Nelson Nash understood better than anyone. There's only one global pool of money. Banks draw from it, insurance companies draw from it, brokerage firms draw from it, and you can plug your own IBC policy into that same pool. When you borrow against your policy, the loan does not come from your cash value. It comes from the insurance company's general account. Your cash value stays fully intact, earning guaranteed interest and dividends every single day the loan is outstanding. No credit check, no bank approval, no qualifying. That is the banking function, and it is yours to control. Let me show you exactly how this works mechanically. A properly structured IBC policy has three components. Component one, the base whole life policy. This is the foundation. It provides the guaranteed death benefit and the permanent contractual structure. Every dollar of premium paid here builds guaranteed, contractually obligated cash value. Component two, the term rider. Usually a one-year term insurance rider that converts a portion of itself each year to pay up whole life insurance to achieve the desired target death benefit. Component three, the paid up additions rider, the PUA rider. This is the engine of the IBC policy. The PUA rider creates mini paid up whole life policies that attach themselves to the base policy. Each one of these mini policies generates dividends. Those dividends buy more mini policies. The process repeats, and your cash value and death benefit keep growing exponentially, year after year. Here is the key principle to carry forward in the next segment. The more premium you direct to your PUA rider, the faster your cash value grows. We are going to prove that with real numbers. Most people have been told that borrowing money costs you, that every loan is a step backwards, that debt is the enemy. Here's what nobody told you. There's one type of loan where the money you borrow keeps growing at the same time you are using it. Not a loophole, not a gimmick. A mechanical fact about how a properly structured IBC policy is built. When you take a policy loan, the money does not come from your cash value. It comes from the insurance company's general account. Your cash value stays fully intact. Your policy keeps earning guaranteed interest. It keeps receiving dividends. It grows while you deploy the loan. That is what we mean when we say your money works in two places at once. Let me show you what that looks like in real numbers. John is a professional in his early 40s. He funds an IBC policy with $50,000 a year for 15 years. In policy year 7, his late 40s, a real estate investment opportunity comes up. He needs $100,000. He has two options. Alternative 1, a policy loan at 5%, no requirement, no credit approval. Alternative 2, a bank loan at 7% with full credit qualification. On the alternative 1, his total cash value grows exceeds the interest paid to the insurance company every single year from year 7 through year 12. Under alternative 2, the bank pocket a 600% return on investment using John's own money. Controlling the banking function personally is the most important financial step you will ever take. Now, how do you make your policy as powerful as possible? I want to show you 3 different policy designs for the same insurer with the same annual premiums. Design 1, traditional whole life, 100% base, 0 PUA. That is what most life insurance agents sell. At year 60, the cash value reaches $3.2 million. Design 2, a balanced design, 40% base, 60% PUA. Cash value at year 60, $4.4 million. Design 3, IBC optimized, 10% base, 90% PUA. Same premium dollars, same insurer, cash value at year 60, $4.9 million. That is 54% more cash value from the exact same premium amount. Cash values increase as the percentage of base decreases. This is not a coincidence, it is by design, and it is exactly how we structure every policy we build for our clients. 3 additional strategies to accelerate your policy. 1, direct any extra income, bonuses, or windfall to the unscheduled paid-up addition rider within modified endowment contract limits. 2, use the IRS and mortgage recycling strategy. Contribute your annual tax payment and mortgage amount to the unscheduled paid-up addition rider. At year end, take policy loan to make those payments. This substantially increases your policy efficiency. And 3, always repay your policy loan. Treat them like any financial obligation. Replenishing your cash value, restore your loan availability, and keep the IBC cycle rolling.
I want to share something I see regularly with people we work with. When someone first comes to us, they're usually carrying one of 2 feelings. Either they're frustrated that their money is sitting somewhere that cannot be accessed without a penalty, without a bank approval, or without triggering a tax bill. Or they're just starting to understand that there may be a better way. What changes everything is the moment they realize that their money can be in 2 places at one time. It is working in their policy, earning guaranteed interest, earning dividends, and it is deployed somewhere else, creating value. We had a client, a physician, who used a policy loan to expand his practice. He needed capital for a new equipment and a second location. While the loan was outstanding, his cash value continued to compound inside his policy. He generated income from the expansion. He repaid the loan, his policy grew, and then he did it again. That is the IBC cycle. And once you see how it works, you cannot unsee that.
The infinite banking concept is not complicated. but it does require the right design from day one. A traditional whole life policy will not do this. A universal life policy will not do this. Only a properly structured, high cash value, dividend-paying whole life policy designed specifically for banking will give you what we have shown you today. You are between the ages of 30 and 55 with a gross family income of $150,000 or more. We would like to talk to you. Visit infinitebankingsimplified.com to book your complimentary strategy call. You can also reach us toll free at 1-844-I-GET IBC. That is 1-844-443-8422. Every video in this series built on the last. If you have not seen videos 1 through 7, start here. The links are in the description below. Every dollar you spend passes through a bank. Make sure it is yours. In the next video, I'm going to show you exactly what happened on your first strategy call, what we cover, what we build, and what you will walk away with.